the famous words of Warren G and Nate Dogg, regulators are mounting up. We have shitty proposals on taxes and regulation from the EU and from the Biden administration in a development that's a surprise to absolutely nobody. These guys are gaping dickholes and nobody wants anything to do with them at this point, but we do still have to deal with our shitty regulators. I have an amazing guest today, Dave Nage. I never know whether to call him David or Dage. I'm going to go with David Nage, my friend from Arca, who also was a past DJ in his former life, and he actually presently still does it, not like me. I just like to pretend that everybody has retired so I feel better about myself. But another DJ in New York City. We're going to talk about all of this. You don't want to miss it. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and take a little Biggie figurine and drop it on the like button. Drop it on your like button and like the video. I don't care. Hey, man, if you're West Coast, Tupac. You know what I'm saying? I don't want to like discriminate East Coast, West Coast. I don't want things to get violent here just because I chose the wrong rapper, right? This isn't the mid-90s, though. I think we've hopefully gotten past East Coast, West Coast rap battles. I hope you guys are all doing well. And I know that you cried yesterday because I wasn't here and I didn't write a newsletter. The beauty of making my newsletter completely free to everyone is that everybody who has shit to say about me can basically just screw off and I can take a day off when I need to travel. I took a day off. I used to write them on Christmas, Thanksgiving, Mom's birthday. Didn't matter. I showed up. But you know what? Yesterday, didn't wake up early in the morning with my kids in a hotel to get you guys a newsletter before they started pestering me. So yeah, guys, we got a lot going on today. Bitcoin obviously has been raging over the weekend in a surprise sort of situation. Altcoins have been outpacing Bitcoin, which is something we rarely see on these big Bitcoin moves. You generally see people sort of FOMOing into Bitcoin out of their altcoins, while altcoins have been outperforming. This is like a wet dream for traders, and it's like finding a unicorn in a forest on Mars, right? So we're enjoying that while it happens. But all of that said, regulators, governments, wow, they're sucking hard right now. Yeah, there you go. Josh Owen says, smack the like button like Will smacked Chris. I'm not even going to get into that. But I could see David in the background. I haven't brought him on yet, but he reacted to that one. Yeah, that's cold. I love Will Smith though. Love Will Smith. Can't assault people on national TV. Last I checked, and not get negative reaction. But listen, I'm gonna bring him on in 1 second. But first, I'm just gonna tell you what we're talking about here. First, we have making your voice heard ahead of Thursday's critical EU vote. If you guys haven't heard this, EU regulators, by the way, have been just trying to like quietly slide aggressive crypto regulation through over and over again. It didn't happen a couple weeks ago and we were worried about it. To give you the TLDR on this, basically, if you're in the EU, this would mean that any transaction, this is the basis of it. There's a lot more, but any transaction $1,000 or more, basically like you would have to KYC the person you're sending the transaction to, not only the exchange, but you as an individual. If I am in the EU and I'm using Coinbase, I want to send someone $1,000, I have to submit that person's information. It's like if you were literally paying your friend cash and you had to submit to the government all of that person's ID information to do so. It's absolutely impossible, aggressive. It could never happen. There's a lot more to unpack here. And then of course, we have the Biden budget proposal estimates additional 11 billion in revenues by 2032 by updating crypto rules. They think they get, first of all, like to be aggressive towards crypto for $11 billion, which is like a drop of water in the ocean versus the deficit, is absurd, insane, crazy, nuts. I literally don't even know where these people get off. But if you guys missed it, here's the real key to there's a lot here, but this is the key. Among the digital asset rules, the administration is looking to update or amending the mark-to-market rules to include digital assets. Ooh, what does that mean? Requiring reporting by certain taxpayers of foreign digital asset accounts. Okay, that is fair. I'm not mad at that. Providing for information reporting by financial institutions and crypto brokers, and treating loans of securities as tax-free to include other asset classes and address income conclusion. Actually, that didn't get into the really shitty part. You know what the crappy part is? If you're mark to market, it means that you're being taxed on unrealized gains. That's what it means. If you bought Ethereum for $3,000 this year and it goes to 4,000 and it's 4,000 at the end of the year, you owe taxes on that $1,000 gain, whether you realize it or not, which means everybody with any common sense will literally have to sell their assets to cover the taxes or risk the asset going down and not having money to do it. It's absolutely insane. It's insanity. I can't even begin. Okay, I'm bringing on Dave to talk about this. Do you want to be Dave or David today? Dave or David? You're muted, so you can be whoever I say you are.
No. I'll be David. I will be David. You
David.
can call me DJ if you'd like to, even though, of course, you said I DJ'd at NFT NYC about 3 months ago, but I'm still in retirement like you, good sir.
Okay, so you actually come out of retirement occasionally. So
like Jordan, yes. Sometimes you got to come out, or like Brady. If I could be like Brady, then I'm good.
Well, we need to now make all the Brady meme jokes where he couldn't stay retired because crypto was doing so badly. Yeah. Small hands. Absolutely.
Tom, if you're listening, I love you, dude.
Give people the quiz. So David obviously is a fellow podcast host, has an amazing podcast, but also is an Arca. You guys listened to Jeff Dorman from Arca last Thursday, who, man, that was a really epic conversation. And I'm recording another podcast with him today as a result. But give us the quick background so that people know why we're talking here.
Sure. I've been with Jeff and the team at Arca from the earliest days, about 4 years ago, almost today. And over that time, we've obviously built it as really trying to be the best institutional asset manager in the world for digital assets, bringing in the trillions of dollars from family offices and sovereign wealth funds into this asset class in a way that they're normally used to. And so with that, I now run our venture fund. So I'm getting to invest in all the early things before they become liquid assets that Jeff and his team are currently managing.
Yeah, which is awesome. And getting into that fund is like getting past the velvet rope at Studio 54, because I may or may not have tried and it was already too late. Just saying, I couldn't get in. I feel like I could.
We'll make sure that we have space for you with a bottle of Cristal at the next.
Thank you. I will happily pay the next higher valuation for the next round. So listen, let's first talk about this EU proposal. I don't know how much you have looked into it, but wow, crazy town.
Yeah, what we're seeing across the board is efforts, around the world to try to create regulation for digital assets. And for years, as a firm, we have said that that's actually a good thing. We want some kind of guide rails. We want some sort of pathways that we know what is cool and what's not cool. And so with this, obviously, you saw what happened, as you alluded to a few weeks ago, and it didn't pass with the mining kind of bill and regulation. This, in terms of knowing, having to put in your KYC AML information for someone that you're sending assets to, is really quite, it's difficult to imagine even that, being able to accomplish. If you use Venmo, if I send you, $100 in Venmo because, I don't know, I like you, or because, we were betting on, the Patriots versus the Bucks and I lost, I don't have to put in all of your information for that. And so I don't understand, why there's an overstep, why I would have to now do that if I was sending you Ethereum. Say we were actually betting on, or, we'd had a little thing between us and, we had dinner down in Miami, hopefully in the next few weeks. And, you flip for the bill and, I just sent you, some gwei or some sats, for obviously for the dinner. I shouldn't have to know, everything about you. I shouldn't have to know your wife's, maiden name, your, what size your shoes are or anything like that. It's kind of ridiculous.
Yeah, and the premise is that it's going to stop illicit activity, right? And we all know that that cash is far superior for right. A private transaction of under $1,000 than sending someone Bitcoin.
Tommy nailed it at Congress with Senator Warren the other week, when she was basically trying to grill Chainalysis, the firm that actually provides data to the DOJ and to regulators, where you have the head of the DOJ basically saying to all the criminals in the world, this is not a good thing to use for criminal activity, because guess what? We can see all of the activity, we can trace you, and don't do it. But
I mean, yeah, the ransomware hack, they were able to recover the funds very quickly. We've seen it over and over. I mean, what's her face, Razzle Khan, the rapping billionaire who stole the money from Bitfinex, right?
Yeah.
I mean, they were able to trap down a $3.6 billion. Took a while,
Yeah.
but that would have been very difficult if it was cash in a suitcase. And now let's move on to the other amazing news, which is this tax proposal.
So funny, I was watching CNBC just before we came on to do this, and I was hearing again Senator Warren talking about the tax on unrealized gains. And I have to say, in my opinion, again, this may not be firm wide, but in my personal opinion, that is the most kind of capitalistic thing that you can possibly do. This country was founded on entrepreneurs that were able to create value, starting all the way back in the early days, in the early 1900s with Ford and everyone else who built major conglomerates and corporations. They didn't necessarily rely on, big banks. Some of them obviously did get some loans, but they relied on wealthy individuals who gave them capital to build their dreams. She alluded to, Elon Musk taking, government money when he built, things like PayPal and Tesla. I know, in fact, when he was going with Tesla, he went into, some of the VC's offices early in the early days. He only had like a piece of paper which basically said, "I'm going to build this," and it was Elon from PayPal, and they're like, "Go build it." That's VC. That's what I do. We support founders in their earliest days when they're building new innovations, and so I'm not government backed. And so this idea that you're taking government money to build these new companies, and thus you have to pay us back for that, is very, very one-sided and quite preposterous in my opinion. And so this idea of as I said, unrealized gains, again, the idea is that you invest in things, whether they're companies, stocks, whether they're digital assets. You invest in things because you're trying to build a future for yourself and for your family. If I am trying to set aside money for my kids' college in the next 8 to 10 years, that's going to be really cumbersome if I have to all of a sudden now pay an unrealized tax, an unrealized gain every year for those things. Again, though, there is a problem that is underlying, is that there is a gap. There has just been this gap for years in this country specifically. And taxing unrealized gains is not the way that you address a gap, in my opinion. The way you address the gap, in my opinion, is education. You address it by making sure that every single person in this country, whether they're below the poverty line or above it, has the best access to education possible. They have broadband and they have Wi-Fi and they have internet access, and you make sure that they have the best access to information worldwide. And so that, as a father, I get to see that every single day in terms of what our kids are dealing with. This is not what we're seeing here in this country, and that's why our education gap versus other countries in the first and second and third worlds is trailing, because we're not teaching our kids to innovate. We're not teaching our kids, how to build the next Tesla or the next Amazon. We're teaching them how to, basically get a score on a test so they can get, paid back for that. And so this is not how you address, the gap that we have today. The way you address the gap today, in my opinion, is effectively by education, infrastructure, and by internet access for everyone in this country.
Yeah, there's actually a great answer from the crowd. Drusified, who's always here. He says the answer is easy: tax loans taken out on collateral. Billionaires don't sell their asset; they take out loans against them. Tax that shit, right? And if you want to target the billionaires, which by the way I don't think is necessarily right, right? But you don't do it by saying that all of us have to pay taxes on our unrealized gains as well, right? I understand they're going 20% tax on anyone with 100 million or more minimum. But the bottom line is, what the hell is an unrealized gain?
Right.
It's literally arbitrary and completely tagged to a date and time that has nothing to do with your investment strategy.
And here's my one question. So to those that are proponents of this unrealized, unrealized gain tax. So if I have an asset that I invested in at the beginning of the year, and by the end of the year, say that I bought that asset, it was $100 per asset. And it could be a digital asset, it could be an equity, it could be a fixed income, instrument, whatever it may be. That was $100 per asset. And then by the end of the year, it is, say at halfway through the year, let's go through a hypothetical. Halfway through the year, it is now $300 per asset. So that's an unrealized gain. There's a gain there. But then by the end of the year, it's $50.
You get to write off the loss?
who's going to make me whole if my asset is now 50% less than it was at the beginning of the year? Where is the definition there? Where is that information? Where is that, where's that detail?
Yeah.
And that's something that is completely lacking, in my opinion.
Yeah, you get to write off losses against your gains in the tax code. I mean, that's part of being an investor, right? You may have a realized gain. If you have enough realized losses, you can write off against it. If they're only taxing the unrealized gain and not the unrealized loss, which they're not going to, it's literally criminal. I mean, it's highway robbery in broad daylight. And if they do tax the unrealized losses, they may actually lose all of that money that they're sort of talking about, right? I mean, it would actually be to the detriment of the government with an asset that's volatile. And on December 25th, you could be up, and December 31st, you could be down, and January 5th, you could be back up. It's insane.
This country was built on those that were able to, provide entrepreneurship and be able to support them in the earliest days. And that goes even when you start to have companies that are publicly traded, you have digital assets that are on exchanges. There was somebody there that supported that, or a group of people that supported that first, day in, day out. And those should not be punished for that, equivalently. And so this, in my opinion, is completely anti-theoretical to the capitalist nature of our country.
Yeah. That $11 billion is really going to help. Let me tell you, when you got trillions you're adding to the deficit every minute, seemingly, it's insane. It blows my mind. I see people saying they're leaving America next year. Your taxes are not leaving with you. That I love that comment. I get it, man. Opt out, do your thing. But there's no, unless you move to Puerto Rico, you're getting no tax benefit being an American going anywhere else on the planet, and they're going to chase you for a very long time. Even if you decide you're not going to be an American citizen, you'll still be paying for years. You're not escaping this. You have to vote them out.
In my opinion, if you want to see things change, you don't leave, you stay, and you fight the fight.
Yeah, I have to agree with that. I want to move on to some other news because this is super hyper relevant for you, obviously. Let me close this ad that came up with it right here, which is crypto funds see largest inflows since mid-December. So, of course, we've had a bear market, but that hasn't stopped funds from raising, right? Or people pouring money into crypto.
That's right.
So what are you seeing?
I would say that the institutional investors out there understand that markets can be volatile. I think it was, Howard Marks that always said things to the nature of volatility is part of the market. I'm not going to fire you because there's volatility in the market. I'm going to fire you if you have complete capital loss. And so there's always going to be volatility in markets, especially in very nascent early markets like digital assets. And so, the sophisticated institutional investor knows that, there's volatility, but volatility doesn't mean that you should just go run and hide. What it typically means is that they're going to spend a little bit more time on diligence. They're not just going to plow in. And so what we're seeing right now is we're seeing continued efforts of institutional investors to come into this asset class in a very intelligent and very, systematic way. It may not be FOMO. I've actually called it slow-mo, where they're doing very good amounts of diligence. But this is what we're seeing is that they want to have exposure. And, as you alluded to, Jeff, and you had a great conversation you're going to be recording. Jeff always had something that he said to me, which really resonated with me for a very long period of time, is that from the institutional investor perspective, they, over the last 15, 20 years, they may have wanted to have exposure to the next biotech company in the world that was going to create a cure for cancer, or obviously now for COVID. But they don't know anything about DNA or RNA or about gel electrophoresis or anything like that. They just know they want to have exposure to it. And so we've reached this point in this kind of movement in digital assets where, it's obviously, according to the press, died a million times, but it hasn't died. And it's obviously just grown and gotten stronger. And so people now realize, well, it hasn't died. And there actually is some real, activity happening here. I want to have exposure to it. I want to find those that have a lot of experience and know how to invest in this asset class and in a manner that I'm used to. And so that's why you're seeing, obviously, funds like ours. You're seeing Katie Hahn's new venture fund just get a significant amount of investment, about $1.5 billion. You're seeing other funds out there receiving very large, significant amounts of capital, like Electric Capital. My friend Avichal Garg over there, congratulations again. There's a lot of great, new funds that are coming out here, but the people behind them have been in this asset class for a number of years. And so you're seeing those that have been here for a long time getting, obviously, the benefit. And I said this about 4 or 5 years ago on Twitter. I have to find the tweet, but I said over the course of the next 4 to 5 years, starting with that tweet, that you were going to see the next iterations of the Sequoias, the Kleiner Perkins, the Blackstones of the world, but in digital assets. And I said that was going to happen. You were going to start to see some really large brand name firms become powerhouses. And I think that's what we're seeing over the course of the last few months here, is that is now starting to come to fruition.
And that's you guys, right?
We're trying, you know, it's, you know, every day I wake up and I wear something like this, obviously here, and I'm proud of the work that we're doing here. It's hard work. This is something where, you know, it's you wake up early in the morning, you obviously are digesting a lot of information. It's something where you can work all day, and I have kids too. You try to spend some time, you try to have some normal time, you try to take a day off like you did yesterday. And you know, it's a lot of work. It's not something for the kind of the half, you know, kind of I'm half into it, half out of it. No, you have to be 110% into this. And so myself and my colleagues, I'm so proud of them, because every single day we wake up and 110% activity and kind of accomplishments in this asset class. And that's what you need.
Yeah, you guys are absolutely killing it. David, thank you so much. So you're going to be in Miami next week? We're going to hang out?
I'm going to be there.
If not, I'll see you, I guess, like 15 years ago at Central Fly or something, right? Guys, so where can everybody follow you really quick? I have your Twitter.
Yeah, Twitter handle is David Nage.
And guys, you should definitely check out the podcast. It's amazing. He was here ahead of me. So a pioneer, certainly, and amazing show. Thank you, man. I appreciate your time, and we're going to move on. See you in Miami next week.
Thank you, sir.
Yes, those guys are awesome. Dave's amazing. Please, seriously, check out the podcast and go follow him immediately on the Twitter machine. Moving on. I should have asked him about this. Silvergate Bank issues $250 million loan to MicroStrategy. MicroStrategy? Collateralized by Bitcoin. Here we go. Oh, my watch freaked me out there. Tried to yell at me. Sorry, I can't help you with that. Yeah, MicroStrategy. MicroStrategy. Look, MicroStrategy and MicroStrategy. We got two things there. I was reading it. I was like, what? But anyways, yeah, it's a subsidiary of MicroStrategy is MicroStrategy, right? And so Saylor just took out a $205 million leverage loan using existing Bitcoin as collateral held in escrow by a third party so that he can buy more Bitcoin. Now, that's cool. I'm here for it. Don't think you should do it, though. Don't think you should necessarily do that. Unless you have a lot of Bitcoin, and if you get a margin call, it's totally fine, whatever. Like, this is a very small percentage of their Bitcoin that's being used as leverage. But it's basically putting up Bitcoin to get a loan with interest to buy more Bitcoin. Probably not something they would teach you to do in school. Don't try this at home, only for professionals. But I am so here for it. God, man. Michael Saylor is a Giga Chad of epic proportions, and he's finding every single way on this planet of Earth to buy more Bitcoin. Every kind of loan, every kind of debt offering, every kind of, I don't know, earning money the old-fashioned way and using it to buy it. The guy is going to keep adding and adding and adding and adding. He's not the only one now in the space, right? Listen, the narrative, as David and I were just talking about, it's definitely switched to sort of VC and Web3 and, you know, all of these investments and gajillion-dollar funds. We don't really hear about Bitcoin as much. But, I mean, it's not like we don't have, I mean, there's an article here. Let me find it. Where is it? Here we go. Here's the market news, right? My Bitcoin rallies as crypto holders accumulate. We've been telling you about crypto holders accumulating for quite a while, but of course, the Luna Foundation has already bought over $1 billion. I don't know if it's Do-Kwon or Do-Kwon. I prefer Do-Kwon, and using it in the context of Jerry Maguire, where he's like, you got Kwon, you got the Kwon, Do-Kwon. You got to do the Kwon. If you guys didn't see Jerry Maguire, I don't know, go watch a movie and catch up, man. You had me at hello. But yeah, they're buying basically $100 million of Bitcoin a day, and have put it out there that they're going to do that potentially all the way up to $10 billion. $10 billion. That's a lot of dollars worth of Bitcoin. So yeah, we have a steady spot buyer, and that is raising and that's showing that we have a spot driven move right now as opposed to a leverage driven move. This is a absolutely huge for the market. We're seeing real buyers come in. We saw holders accumulating before. That's what we're seeing. This is the real deal, guys. And we're breaking through really key levels. Let's take a look at the chart. What do you say we look at the chart? Yeah, stablecoin. That's what he calls himself, actually, I think, on there. Stablecoin. But yeah, I mean, Luna is backing $10 billion worth of their stablecoin with Bitcoin. It's a huge move. Huge move. Oh, everyone debates. Does Tether have Chinese paper and is the money in the bank and whatever? This Giga Chad is like, I'm putting Bitcoin behind it, bitch. You know what I'm saying? Best backing in the world. But here we go. This is the monthly chart. Almost closing the month. Got a couple more days. But yeah, it's a never-ending bull market when you zoom out. Yeah. Never-ending bull market. Low, high, higher, low, higher, high, higher, low, higher, high, right? Yeah, we lost the EQ of that channel. This was my premise, was that would be support. Didn't happen, and we'd head to the top. That's $200 and something thousand and rising. Each time that it had previously broken the EQ, that dashed line, it had visited that side of the channel. Up, broke it, came down to the bottom. Broke it, went up to the top. Broke it, came down to the bottom after a retest. Broke it, did not make it to the top. But guys, first of all, I still think it will. Don't think we're going to the bottom. But even if we just ride this dashed line for a couple months, look, 65, 69, 70, the number goes up. The number goes up. But things are looking quite good here. And then, of course, listen, we got the weekly here. These were the key levels we've been talking about. We should be going up to 53,000. Should be going up to 53,000, right? We accumulated under 45. We traded under here for many, many, many months. Lost it here, December, everybody knows, right? We had the huge move down, accumulated, and then at the beginning of January, we lost that 45 level. Have not been above it since. Well, we now have a very powerful move, and this is not to be understated, because not only did we break that 45.5, it was also the weekly 50 MA, which is a very, very key line for a lot of algorithms and such. And this is what I was showing you on the daily, right? That we had this sort of level here, this ascending triangle forming, higher lows consolidating towards a flat top. That usually leads to a burst through. Busted right through it, right? When you're getting these higher lows towards a flat top, you have an ascending triangle. Now, look, I'm going to reload this because I know I put a target on it. If you're trading this as an ascending triangle, this is what you're looking for, right? You have the depth of the triangle right here, basically from 33 up to 45, 46. You take that measured move from the resistance. You expect to test the support, so don't be surprised if this comes back to 45.5. Target 63,700, 63.6, something like that, based on that depth. Doesn't mean we'll get there, but that's what's supposed to happen. Things looking very, very good in all these time frames. And of course, let's look. I know we have it here. The weekly MACD, which I forgot to put in the newsletter this morning. I meant to. Where's my MACD, bro? Weekly MACD. Right? Bullish divergence here. But weekly MACD crossing positive for the first time since last year, which was in advance of the major October moves. Right? Look, I haven't even looked at this the first time. We had this cross right here. Bullish cross right after price went up for a couple weeks. And then we had the bullish cross and went all the way up to 69,000. Now we've had price go up for 2 weeks. Bullish cross coming in. Have fun. A lot to like here. Of course, we have massively overbought conditions, even overbought on the daily, 12-hour, 6-hour, already showing some bearish divergence potentially. 4-hour. If we push any higher on price than like 48,000 in close, we're going to get bearish divergence. Does that mean it's over? No, not to me. It means that we look for, maybe we get that drop down to 45.5, a little bit of consolidation while things reset. In a bull run, all bets are off. Someone's asking Sly monthly MACD. I don't know. Let's look. Monthly MACD. Let me see. Monthly MACD. That already, monthly MACD went bad a few months ago. Yeah, it could be a bad thing, but we've literally never even had precedents for this before, so I have no idea. No idea. Thank you for the distraction, though. Is there a correction anytime soon? I have no idea. I mean, we're extremely overbought. That usually means we're going into the power zone, but RSI on the 4-hour hit 85. That's pretty high. I mean, listen, I'm not saying it will happen, but you should. On the weekly, you should get a retest of the 50 MA here on the breakout, and you should get a retest of 45.5. On the daily here, you should absolutely be looking for a retest of the ascending triangle top, right? That's what I drew here. You should, maybe we could like do one of these, and then come up. Will we break below this? We could, but technically right now on the chart, we have broken a key level as resistance. We would want to see it retested as support and see the market continue up. That's it. U.S. lawmakers introduce Ecash bill, a new push to create a digital dollar. This is interesting. This is interesting because obviously we've been talking about the Fed creating a central bank digital currency, but a group of U.S. lawmakers says the U.S. Treasury Department may be the right government entity to create a digital dollar, not the Fed. Because fuck the Fed, right? I mean, Treasury kind of sucks too, let's be real. A new bill introduced Monday would authorize just that. Basically, they're saying that the electronic cash, which would be a digital dollar, would still preserve all of the privacy and anonymity, believe that, with an eye to preserving privacy and anonymity in transactions of cash. We do have some lawmakers out there on both sides of the aisle, mind you. Actually, these are all Democrats. Wouldn't have expected that. I don't get political. I'm just saying usually we have bipartisan support or it's being led by Republicans right now when it's privacy generated in support of a bill. And if we're going to have digital dollars, which we are, this is the kind that we want. Get that Ecash, bro. Also, be a good rap name. Ecash, bro. Ecash. Okay. Terra Luna sets new highs of nearly $106. Prices have increased nearly 10% in the past 24 hours. Of course, Luna, as we talked about, buying up all the Bitcoins. All the Bitcoins. They are doing the quant. They're doing the quant, as we said. Let's take a look at their chart. Oh, yeah. So, listen. This was to me, 103.6. This was the real all-time high. And then we had these sort of sweeps and obviously the move down. If you were here, I've been posting bullish Luna charts basically at that retest of 78. But, now you could put a line here as the high, right? You want to close above that now. Any close above these lines, you look for a retest of that area, and then you're in price discovery. Absolutely should be mooning. So I wouldn't buy it right now coming into this absolutely strong resistance, right? We just saw what happened at the last time it hit this resistance. You had these bearish SFPs and a move down. But if we can close above like 104.83, Luna's looking monster. This is what I was alluding to earlier, right? I mean, this is Bitcoin dominance on the weekly. Since it topped a few weeks ago, Bitcoin dominance has been dropping. This week right here is when Bitcoin's been going up, right, for the last 2 days, and Bitcoin dominance continues to drop. That is huge for altcoins and not a situation that we see that often. Let's look at ETH BTC to give us sort of an idea. Oh, my God, what is happening with the rockets and the – dude, you are in timeout. 4D333. Yeah. So, I mean, let's look at this, right? Shared this in the newsletter this morning. The newsletter is free, guys. It's linked down below. My God, subscribe. So I've been telling you for the last 3 weeks that ETH looked good. It was bouncing off support. Looked like it was going to flip the 50 MA. Well, here we are above the 50 MA on the weekly, above support. And this is Ethereum versus Bitcoin. So the last 3 weeks, it's been outperforming. Alts have been doing that as well. Usually when Bitcoin rages up like this, you see people FOMO out of their alts and into Bitcoin. That's not happening here, right? Someone's asking about Solana over here. I'm in profit, by the way. Remember when I bought Solana at 116 on the way down? And then I bought a whole lot more at 80. I'm now massively in profit on that Solana trade, even though I literally bought it here when it was dying. Little patience. Took all of, I don't know, 2 months, right? I don't know, man. I don't really have the Will Smith comments are too easy. I mean, why do you think Will Smith even had to move to Bel Air in the first place? Got in one little fight. Mom got scared. He's had this problem since before. Moving with his auntie and uncle in Bel Air. Anyways, though, so, I mean, look at this, right? We were trading this here. We told you guys, told you around 95. But Solana looking massive, outperforming big time. Looking really, really good. So alt's still looking really, really positive at the moment, even with Bitcoin going up. It would be awesome right here, probably for altcoins, to see Bitcoin slowly consolidate and maybe retrace for that retest and have alts go absolutely nuts. But right now, I really think Bitcoin should be heading up to the 53 area, maybe down to 45, up to 53, and then we will judge. But things are looking very, very good right now. What do you guys got over here in the comments? I have one more story about NFTs, but I don't think you guys care. I'll just tell you. World of Women, Galaxy Ethereum NFT drop generates $79 million in a day. That's a lot. World of Women. I was in New York for a friend's, to celebrate a friend's daughter. And I was with a bunch of my friends from college. And one of my boys, super into NFTs and crypto, we were at like a nice dinner. And he had his like laptop on the bar with the bartender like guarding his laptop to make sure he had internet so that he could participate in this drop. And he was just sitting there minting and pending, and his like wife was at home like trying to get him. They were all in. They got a couple of them, although he generally got rejected. But he was doing this. He was buying these like at dinner. So I can't miss the drop, bro. You're a 45-year-old man, and you got to get them World of Women, and I'm here for it. Yeah, but $79 million right here in one single day. A lot of monies in them NFTs. What do we got over here? You guys talking about? Oh, tomorrow it's going to be freaking awesome. So obviously Chartapalooza doesn't happen anymore because I can't take chart requests from 37,000 of you people. So what I'm going to do, I'm going to bring on Texas West Capital, Christopher Inks, my mentor, the guy who really made me a good trader. Got to bring him on, and we're just going to look at charts, go back and forth, see his view, see my view on altcoins and Bitcoin. It's going to be awesome. And I bet there's going to be major alpha to be discerned and discovered there. So yeah, listen, it's Chartapalooza, just not with requests. It's going to be awesome. It's going to be awesome. What about practice of using just 3x leverage to buy more Bitcoin against Bitcoin collateral? Up to you. I don't believe in borrowing to buy things necessarily. You know. Yeah, Scott's Yoda. That's right. Look at charts, we will. Draw lines on charts, we will. Do or do not. There is no try. I don't know. I've never tried Yoda. Yeah. You need some voting system for Chartapalooza. Yes, the voting system is not. No, I'm not going to do it. I've voted. You know, I voted for myself. Too much work, guys. It's a lot. That's funny. There can be 100 people in a room and 99 won't slap you, but one will. That's funny. That's funny. I've been on Crypto Banter a bunch of times. Yeah. Been on Crypto Banter. They're up in their game over there, man. It's awesome. They're so like I was like, yeah, I'm gonna have Raul Paul and Dorman, and they were like, okay, well, the next day we're gonna have Scaramucci, who's coming on my show in a couple weeks again. Michael Saylor and Yusko. Yeah, they're going big, man. Dude, we're all trying really to up the game here. Yeah, that's all I got for you. Tomorrow, you guys tune in tomorrow for God's sakes. It's gonna be awesome. It's gonna be awesome. Yoda gonna, oh my God, look, the guy came back from timeout. Now you're blocked. Like the 500, yeah, everyone wants that chart. Yeah. We love you here. It's the Stone House. What's up, Bella? That newsletter is fire. Thanks for putting so much time into it. You are welcome. You are welcome. All right, guys, I am getting the flip out of here. Be there tomorrow. Don't miss it. It's going to be great. Bye.